Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, Yatin, not a terrific Tuesday and, not a happy trading day, so to say,
Absolutely.
given the fact that, we've seen broad-based weakness across, the mid-cap universe, the benchmarks as well. The Nifty, first of all, has slipped below that 24,400 mark. The mid-cap saw deeper gashes, 2.2% cut on the mid-cap index, almost a 1250 point cut when it comes to the mid-cap index, and breadth was extremely poor. The NSE advance decline ratio at 1:5, just 400 advances to 2,200 declines. So yes, the breadth was extremely poor, and lots of result reactions as well. We saw some of the stocks plummeting somewhere around 10% or so post their numbers. We'll take stock of them. But in terms of sectors, PSU banks deserve mention. The index has slumped for 5% or so. I think it has broken below some key support levels as well. The Nifty Bank Index also under pressure, 54,270. That's where the Nifty Bank Index is at, lower by about 650 points or thereabouts. All the sectors, barring the auto pack, were trading in the red. The auto pack just about managed to end in the positive territory. But if you look at the Nifty gainers, the top names would be a mix of FMCG and auto names. So you had the likes of Hero MotoCorp, M&M, Eicher Motors, Maruti. All these stocks were among the gainers, and you also had the likes of HUL and some of the other names like Nestle that were on the gainers list. Aside of that, you had Tata Steel as well doing well. M&M, as I mentioned, JSW Steel. HCL Tech, Apollo Hospital, Bajaj, Finserv, Ultratech Cement, these were among the other notable gainers. But in terms of laggards, Adani Enterprises down 4%. Yesterday, the Adani twins were among the top gainers, and today Adani Enterprises is the top Nifty laggard. Jio Financial is a close second, 3.5% cut on a Jio Financial. Eternal, that had seen a good run up until now, it's down somewhere around 3%, and so is Trent. That was among the top Nifty gainers yesterday, and today has shed somewhere around 3% or thereabouts. Life insurers like SBI Life, HDFC Life under pressure, and of course pharma names also under pressure after Trump had signed executive order to boost domestic manufacturing in the US. That comes as a setback, but more clarity awaited, and we'll have to see whether or not there are some pharma tariff announcements in the upcoming weeks or not. So yes, that was the overall market texture. Not a great day in terms of trading action. US futures were also in the red, and mind you, the Fed meeting kicks off today, the two-day FOMC meet, although expectations are that the Fed will stand pat on interest rates, but it's the commentary from Jerome Powell that will take center stage. But Yatin, quite a few numbers, and the likes of Bank of Baroda plummeting, and how taking the entire Nifty PSU Bank Index down with itself. Tell us something about the numbers. What was so much disappointing in the numbers?
So, before we talk about the mid-cap gainer losers, Nandita, clearly the PSU Nifty index is down 5% below 200-day moving average, and the key moving day averages are taken off. And since SBI reported numbers, we have consistently seen PSU banks under pressure. Now, let me sum up the numbers for Bank of Baroda, which was down 11% in trade. Why? Because, their profit growth was only 3% year-on-year basis. Net interest income has declined 7% year-on-year. And if you look at the net interest margins, which is a key parameter for banks, since, everything is good on asset quality, the margins declined by nearly 8 basis points QOQ. To come in at 2.86%. Estimates were nearly 2.9 to 3%, but clearly the margins have come below expectations. If you look at the advances growth, that was 5% sequentially, and slippages ratio for the quarter increased to a level of 1.1%, which was 0.9%. So, the slippage ratio is increasing. Your net interest income is below expectation. Your net interest margins are below expectations. And in a market where people are expecting better results from PSU banks, a lot of rally in the PSU banks has happened because there was growth. And if you speak to a lot of fund managers, everybody was overweight financials. SBI is disappointed with numbers. Kotak Bank is disappointed with numbers, and now joining the ballet is Bank of Baroda. So except for HDFC Bank and ICICI Bank, I think most of the numbers which have come in from the banking space, irrespective of private or PSU, has disappointed. and hence the kind of weakness that we saw in the PSU bank index, down by nearly 5% intraday.
That's true, Yatin. I was talking to big market voice Sunil Subramaniam today, and there's a whole debate of now that the report cards have started trickling in, whether one should stick to those large cap private names, or how should one really navigate the entire banking space right now. He also is of the view that long term, of course, PSU banks are good, but in the very short term, 3 to 6 months time frame, if you're looking at, in that time frame, private banks are much more better poised to navigate even the margin challenges, because even SBI for that matter has alluded to the fact that the rate cut cycle is on, and another 50 basis points will come from RBI, and there will be pressure in terms of margins as well. But private sector banks better poised to weather that challenge. But Yatin, what about the other movers from the mid-cap end? There were quite a few of them. Take us through some names.
So, from the results, boys, we had CCL Products. That stock gained 17% after, strong numbers this time in Q4. So, that was clearly the stock of the day. Other stocks like Godrej Agro, CED, Chambal Fertilizers continued to rally, 4 to 5% rally seen there. However, Sonata Software continues to fall. That stock was down 9%. Manyavar was down 7%, Union Bank, PNB, all of these stocks down anywhere between 5 to 7%. So obviously in the losers list, you will find a whole host of these PSU banks. And, stocks like Coforge, went up 4% intraday, but ended the day lower by percent. So almost a 5-7% kind of a decline for Coforge post the quarterly numbers. But stocks like Bharti Airtel, Chambal, CED continue to hit that 52-week high. But Raymond and Manyavar, these are the two fashion stocks, if I may put it so, at 52-week lows, both down nearly 4-5% in trade today.
All right, then not such a fashionable day for some of these fashion-related stocks. But let's talk about Coforge that you mentioned, Yatin. The numbers were fairly good, and even the outlook was pretty good. But I think the stock succumbed to selling pressure amid a broad-based sell-off in the market. Taking it through the numbers, they were pretty okay. The net profit was up 21% on a quarter-on-quarter basis. Revenue also rose almost 5%. Margins beat estimates at 13.2% vis-a-vis 11.9% sequentially, and operational performance was slightly better than what the street was expecting. The board has also approved a stock split in the ratio of 1:2, the record date for which is on the 4th of June, and the deal intake was at an all-time high of $2.1 billion. So yes, all in all, it was a good quarter, and the outlook provided by the company is also pretty good. They do not really provide any revenue guidance, but it does expect to do better than the earlier $2 billion target that they had outlined in terms of revenue for FY27. The management has said that they expect to better that figure of $2 billion as well. Now let's come to the street reaction as well. Most of the brokerages have maintained their buy call on the stock. Target prices have also been raised quite a bit. For Jefferies in particular, the rating is buy on the stock, and target price has been raised to 9,000 rupees from the earlier target of 7,860 rupees. They've said that the CC constant currency revenue growth of 3.4% on a quarter-on-quarter basis was the key positive surprise, because some of the other names in the IT space have disappointed in terms of CC revenue growth. So yes, Coforge did spring a positive surprise on that front, and Jefferies also believes that the strong growth that the company has displayed in the quarter gone by is expected to sustain going forward. They've maintained their FY26 to FY27 estimates, and they're expecting 23% compounded annual growth rate in EPS terms over FY26 to FY28. And consistent execution and strong growth outlook should also support valuations going forward. Now, Motilal Oswal, also buy rating, but here the target price has been raised to 11,000. That shows that the stock has an upside potential of somewhere around 47% or so, because the stock has already seen quite a bit of correction. If you look at the YTD performance, it's down 22% or so. And Motilal Oswal has also said that the recent Sabre deal that the company has inked is signaling mid-tier IT companies edge in terms of winning cost-saving deals. And in terms of the tier 2 players or top picks in the tier 2 IT space, Coforge is among the top picks for Motilal Oswal. They've also said that the strong deal TCV indicates robust near-term growth outlook, and they are valuing Coforge at 38 times FY27 EPS. They've also said that Cigniti may prove to be an effective long-term asset for the company. Remember, when they had made this or announced this deal with Cigniti, there were a lot of worries whether or not there was any revenue visibility in terms of this deal or not. But that has been put to rest, and Motilal Oswal is saying that it could prove to be an effective long-term asset for the company. Even other brokerages like Nuvama have buy calls with target price anywhere between 9,400 or 9,500 or so. And all in all, the view on Coforge is pretty much positive. As I said, the stock is down 20% in 2025 so far. But if you look at the last 1 month performance, the stock has managed to stage a good rebound of 15 to 16% or thereabouts, Yatin.
Absolutely, and Coforge, that is one stock which saw intraday profit taking. From the recent lows, I think we have seen a good bounce back in Coforge and the stocks like Persistent. And clearly, on the valuation front, most of the brokerages feel that Persistent as well as Coforge have been on the richer side of the valuation versus the large cap peers. But talking about the real estate space also, which is kind of doing well, but this year post we saw Godrej cutting their real estate guidance. I mean to say Godrej Properties. Clearly, other stocks are also nervous. Today we had Sunteck Realty also looking slightly nervous in trade. In fact, today we have Jefferies, which has cut the target price on Sunteck Realty to a level of 575 from the earlier level of 685. FY25 for Sunteck saw 32% kind of growth because of the new launches that they had done in the luxury segment. However, the company is expecting a similar growth rate in FY26 also. However, collections have been lagged due to delay in project completion. So, delay is a concern. Also, if you look at the company, they are looking to launch new projects as well as Q4 was a record number for the pre-sales figures. So, whether or not the real estate rally sustains is something we'll watch out for, since FY25 was a great year for real estate players in collections, in launches. How do they really take the momentum in FY26 given the macro and geopolitical uncertainty will be something we'll be watching out for. But yes, brokerages have cut the target price by 110 rupees on this particular counter.
Okay, brokerages have cut targets and the stock was down, and the entire realty pack was on shaky ground today. Yatin, the realty index in fact has lost 3%, in excess of 3% in today's session. The other stock on my list is Indian Hotels. Though the numbers were pretty good, Street is fairly cautious on this stock, which is why we saw a 6% cut on the stock, post numbers. Despite steady earnings. In terms of profit, they saw a good, healthy 25% uptick. Revenues also grew somewhere around 27%. Margins were also higher if you compare it with last year, 35.3% vis-a-vis 34.6%. So yes, there was nothing as such wrong in the numbers, and even the outlook was pretty buoyant, given the fact that the management has guided for double-digit top-line growth going forward of 12 to 15% or thereabouts. But there is some bit of caution on the street in terms of valuations also. Where Nuvama flagging off that the stock has run ahead of its earnings, which is why they have a reduced rating. But in terms of management commentary, they are expecting 25 to 35% growth from their reimagined business in FY26. In terms of areas, they've said that Goa is the only place where occupancy is not increasing, but Delhi, NCR and Mumbai region remain very strong in terms of demand. Now, IHCL is also reimagining its hotel brands, from where, of course, it is expecting 25 to 35% growth, wherein they are, reimagining brands like Ginger to attract a broad range of travelers, including the younger generation and more budget-conscious travelers. They've also earmarked, in the past, Accelerate 2030 strategy that aims to significantly expand its hotel portfolio and double its consolidated revenue by 2030. Now, this growth will be driven by scaling existing brands as well as expanding into new regions and internationally as well. Now, the management has said that they are looking at much more openings in the next 2 years. They are looking to maintain their margins at current levels of 35 or so, and they will be looking to find a balance between margin, investments as well as growth. In terms of capex, for the year, it's guided at 1,200 crore rupees, focused on a mix of greenfield projects as well as renovations. In terms of street view, most of the brokerages have also retained their existing calls on the stock. Looking at Jefferies, they have a buy call. Target price, however, has been cut slightly to 980 rupees from 1000 rupees. The sector outlook remains positive. That's what Jefferies has pointed out, because the hospitality sector is believed to be in an up cycle, due to strong domestic demand, and supply has been limited, so to say, which is why the outlook on the hospitality sector is pretty positive going forward. And for Indian hotels in particular, Jefferies is expecting EBITDA PAT CAGR of 16 to 18% over FY25 to FY28. But Macquarie is a little cautious. They have a neutral call here, and the target price is sub 850 rupees. It's at 820 rupees or so. They have pointed out that the company has missed expectations in terms of EBITDA. And they've said that there has been a reduction in their project pipeline for FY26 and FY27, a 10% reduction, which is why they have maintained their neutral call and are a little cautious. On the other hand, Motilal Oswal, that's quite bullish on the stock with the target price of 940. They are expecting, key drivers in terms of FTA growth, as well as the wedding dates that are, they've pointed out that there are 70 plus wedding dates that are evenly spread across the year. Plus there is a strong room addition pipeline in the management hotels, key renovations in hotels like Taj Palace Delhi, Taj Calcutta. All these renovations will also yield results going forward, which is why they have reiterated their buy call. So all in all, there's mixed view on Indian hotels. Nuvama and Macquarie are a little cautious, but brokerages like Jefferies and Motilal Oswal still have faith in Indian hotels. All in all, nothing wrong with numbers, but
I think it was a general profit taking. I think, as you said, nothing wrong in the number. Commentary was also good. In fact, they're expecting price growth, new projects getting online. But yes, I think broadly the war situation plus the kind of stock run-up that we have seen since COVID is great. I think largely some profit taking, and probably the reason why the stock was down 6%, almost closing at the day's low.
Well, those were all the stocks on our list this afternoon then. Not a great day when it comes to trade, but let's see, tomorrow is another day, and tomorrow night is when we get the Fed decision. Let's see how global cues also pan out in the run-up to the Fed decision. But completely timed out on closing bell. Come back and join us tomorrow morning at 9 a.m. on opening bell. I'll see you then. But for now, it's a goodbye. Thank you for watching and have a great evening.